Good morning. It's Wednesday, December 4th, about 6 a.m. Central Time. All right, the precious metals are flat to mixed after yesterday's positive trading session, which isn't a negative trait. Traders are preferring stability over uncertainty. So looking at the overnight price action here and focusing on the precious metals sector, you've got gold continuing to trade in a tight range. You've got February gold at 26.67, unchanged on the day. March silver at 31.35, down 14 cents. March copper now 125, had a big surge yesterday. I recommend looking at that particular chart. Trading last at 419. You've got February aluminum up 15 at 26.26. January platinum down 17. That's what I'm going to eye on my radar here. I've been waiting for a pullback on that particular market to position more on that particular contract. Now that's trading at 943, down 17 and near the low of the trading session. You also have March palladium down 13 at 973, and then the gold silver ratio sitting at 85-1. So shifting to the outside markets here, crude oil futures, big surge holding just below that 70 level and unchanged on the trading session. You also have the US dollar index. You want to keep an eye on the dollar, and I'd circle this and have a daily chart pulled up on it. You look at 105.57, a breakdown below that level could signal a head and shoulders pattern, and a big surge could come underway in the foreign currency markets and also the precious metals. So if you've been waiting for a trigger or an entry on many of these metals and you've been sidelined, that breakdown of the dollar is going to be key. So 105.57 would be your mark on that. Bitcoin futures continue to support and trade within a range. We're seeing a wave of buyers come in between about 92,500 and 88,000, although we've not seen any kind of breakdown to that lower range. It's been signaling higher lows on the charts and in more of a consolidative fashion. I anticipate a lot of traders take profits in that 99,000 to about 101,000 range there, and any kind of breakthrough of that level on the upside, you're going to see them reemerge and jump back into those markets. Now, the S&P 500 surges here after Salesforce showed strong revenue growth and promised to boost its AI. Our U.S. equity markets, a lot of people believe they are overvalued. They're actually acting as a safe haven play for many different equity investors out there. If you look at equities over in Europe, you look at them over at Asia, people are preferring the U.S. markets, and that's why these dips have been quite shallow in our markets as well. So we've been positioned on the long side in the U.S. equities, but backing them up with cheaper, inexpensive month-end put options. Will most likely continue to roll those out as we do anticipate a breakdown in this market perhaps in early 2024. Now, looking at the economic data to watch, the key event risks and the Fed Watch tool. The CME's Fed Watch tool shows a small boost in the probability of an interest rate cut, sitting at 74% at that December 18th meeting. We are going to have a lot of economic data come out, and it starts off at about 7:15 a.m. Central Time. We have that ADP, that non-farm employment change, sitting at 152,000 is where the expectations are. This would be a big drop off from last month's 233. We also have several Fed members speaking here. We have Chairman Powell speaks later in the afternoon at about 12:45 p.m. Central Time. We'll also have Beige Book, and then the most anticipated events here, besides Powell and the ADP, are going to be the services PMI data and the ISM services data as well. So some key technical levels. A lot of people are asking that on the gold market. What could break gold and silver out of these particular ranges here? Gold, you've got a resistance point. It's the November 29th high. I'd identify that on my chart, 2690. Above that is going to be the 50 days. So you're going to have a pocket resistance from 2690 to 2703, and then the trend reversal point at 2747, which would be a big breakout on the chart. We'd start to threaten that 2800 level, which would be that October 1st high. Today's probable trading range, unless some of this economic data creates more volatility in the market or we see a breakdown in geopolitical uncertainty, we're most likely going to trade in a range of about 2647 on the downside, 2685 on the upside. Shifting to the silver market, pocket resistance as well. 31.90 on up to 32.04. I'd circle that region there. And then the 50-day moving average above that, 32.30. The trend reversal point, this is where people really go into the silver market, will be a break above 32.69. Today's probable range gets you up to that resistance point and limits the downside here most likely. 31.13 on the downside, 31.95 on the upside. I publish these probable ranges, and then also because of surges in volatility, I give you a second and third level as well in the metals edge on the tactical ranges, and that's what many people use for their trading vehicles, for their buy and sell levels for intraday trading and core positioning for longer term trends. So if you want to see that, be sure to register for a 2-week trial of the Metals Edge below. We also outline all the key seasonal factors and seasonal charts, and I'll most likely add the silver seasonal here today. So be sure to check that out. You got any questions, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.